Morning all, and welcome to this business breakfast thinking. We are discussing this morning bounce back loans, or we're discussing in effect the extent to which the government system of keeping the economy afloat in 2020 is going to come back and bite it in 2021, the extent to which there's been fraud or abuse of the bounce back loan system, and the question of whether or not more broadly there is waste in government in the course of the pandemic. We're incredibly lucky to be joined by Stephen Morris and Mike Buckley. But I really would like to run this as a proper sort of pretty normal, pretty casual, pretty chaotic news meeting where we're trying to get to the bottom of what's actually happened in terms of government support and this broader question of whether or not when you pump money into the economy, it goes to the right or the wrong places, because it feels as though on both sides of the Atlantic, this is the biggest debate of our times, the extent to which stimulus spending lands in the right or wrong places, and bounce back loans is, if you like, exhibit A. So why don't we just get stuck right in? I hope at the end of the hour, we'll come away with some thoughts about a better understanding of exactly what Rishi Sunak's policies have meant, but also some questions about where we might take things, either in our commissioning of stories or in our commissioning of slow views or informing our sense maker on this subject. So Stephen Morris, you're the FT's banking editor. I really appreciate you joining us. I will make a quick plug, Stephen, for what we're just talking about now, which is your reporting into Credit Suisse. If we get 30 seconds, we might get a live version of what that all means, because it's one of the more interesting stories in the world of finance. It's been the most interesting story in many ways, one of the more interesting stories for a decade, but it's really come to a head. But Stephen, I think you were sort of one of the canaries in the coal mine in the second half of last year, saying, look at how much of this 46 billion pounds is going awry or will never be recovered. So why don't we start very simply with what your read is of who got the bounce back loans and how much money will eventually come back or not to the Treasury?
Yeah, well, this kind of crossed my desk because the banking system in the UK has been used as the conduit for all of these loans, which you'll remember are actually coming from the government through the banks. And over the course of last year, since May, when the scheme was launched, we were talking to a lot of bankers who were kind of giving us detail about what was going on with this scheme, what was it, and what was their experience of the people taking these loans. And it kind of culminated into a long read that we did on the 20th of December called, the headline of which was "A Giant Bonfire of Taxpayers' Money," with banks providing the matches. And this was subsequently backed up by official data saying that of the 45 billion plus of money that's been lent under the scheme, as much as kind of half, so we're talking something in the order of 25, 26 billion, could actually go bad, either through bankruptcies on small business or be lost to fraud. And you remember that when the scheme was conceptualized, there was a moment of real high panic in the UK. Ministers were being screamed at by publications from the Times to the FT to everyone else to try and come up with a scheme akin to what was being offered in Switzerland, which was a simple one-page form where you self-declare your company's income and then you get a loan. And there are not the normal affordability checks, the know your customer checks, anti-fraud, anti-money laundering. And banks were just basically told to get this money out there. And they did that very effectively. I think within a week, sort of 8 or 9 billion was lent. And some CEOs say that they did 17 years worth of lending to SMEs in just a few months. So, and the scale of the scheme has exceeded anything the government expected, something to the order of a third to a half more than they had initially budgeted for. And, this is not going to be sort of an immediate reckoning, because these are 10-year loans of up to £50,000. So this is really going to be something that hangs around in terms of the UK's budget for a number of years to come. We won't really see the full scale of the damage for a while. And doubtless, because of the level of anticipated losses and fraud, there will be multiple inquiries into this. Was it the right thing to do? And I think I'll end there and maybe let Mike say something.
Can I ask you just a couple of questions, just so I understand? Yeah. One is the understanding, if you say, let's say, because as you say, we don't know, and we won't know for some years exactly how much gets repaid.
Yeah.
But let's use this this number that's being widely estimated, 50% of the 46 billion, right?
Yeah.
When you dig into that, is it fraud, or is it in effect a penalty-free default? Is it the fact that actually it's not, quote unquote fraudsters who are not repaying the money? It's people who've just calculated that non-repayment is a penalty-free option.
The vast majority will be these bankruptcies or sort of non-repayments, defaults on these loans, rather than outright fraud, which will be an overall smaller part of the losses. But it'll be very difficult to tell, especially over a sort of a 10-year period. I mean, how will you categorize what was just a bad business decision or the result of an unexpected second or third lockdown, and what was, kind of very cynically stolen by people who, some of whom will have calculated this is essentially a free grant. I mean, there is no way the government, police and court system can look at 1.5 million loans made, under extraordinary circumstances over a very short period of time, and, determine whether all of them were made under the right conditions and all the money was used wisely. I mean, remember, these are small businesses. They have a relatively high failure rate compared to sort of large corporates anyway. So yeah, it is going to be quite hard to sort of sort through all of this. And I think a lot of people, who were looking at this made that calculation. A lot of people will be looking at this as a grant.
Yeah. Well, Mike, can I bring you in? Just, I know you come at this from many different angles, given what Campaign Central does. But I'm interested. I just wanted to go back before we sort of start doling out the blame or even the criticism, just to go back to where things were in this time last year, which, as Stephen said, was there was real anxiety, wasn't there? The coronavirus business interruption loan scheme was just proving too cumbersome. And although Rishi Sunak had, I think, earmarked 340 billion, within a matter of a month or two, less than 1% of them, that CBILS money had gone out the door. So businesses, small businesses, were desperate for funding, right? So do you have some sympathy with the impetus behind the scheme?
I mean, the scheme is an attempted solution to a problem, which is the fact that so many small and medium-sized businesses had to close down because of the pandemic, because they were customer facing, or just the way that their business works meant that suddenly there were no customers, if you like, and they couldn't go and find ways to make an income. So the Chancellor had to do something, and his solution was to give those people access to a loan. So different to the way that he treated other sectors of the economy. So where people, if they were PAYE, got access to the furlough scheme. If they were self-employed, they got access to the self-employed grants. If people were running small businesses and as company directors, then they couldn't get access to any grant money at all. All that they've had is access to the bounce back loans. So that you may well find, and I would imagine it will come out in the wash, that people will have taken bounce back loans. And I know of a lot of company directors who've used those loans just to survive. They've paid their mortgages with them. They've paid their staff with them. Lots of the bounce back loans have been used by companies that have survived throughout the pandemic. They've survived so that they can continue paying their staff. So they've maybe put their staff on furlough, but they've used the bounce back loan money so that the business will continue to exist. And they've done that in part so that maybe they can continue to exist and keep their house in order, if you like, and pay their mortgage, but also out of generosity, wanting to keep the business afloat so that they can keep their staff on furlough. So I think that the key difference there is that self-employed and PAYE people, they've had access to grant money. They're not expected to pay back. These small companies, or the directors, all that they've had is the bounce back loans, which they are expected to pay back. So what may be seen as them taking a grant erroneously, what may be seen as fraud, they would maybe just see that as, this is all that we've had. We've had no choice but to take this money, to live off this money. Rishi Sunak could have given us a director's grant. He's chosen not to. He's made his own mistakes.
And so, Mike, that's a really interesting read on it. I hadn't thought of that. Which, in effect, this was an emergency grant, and it was called a loan. But for many people, it was in a similar spirit to the furlough. Is that the way you read it?
That's not how it was intended by Rishi Sunak, and of course, that isn't how it's been seen really by the directors. So the directors have been part of. There's been a number of different pressure groups like Excluded UK and Forgotten Limited, and Forgotten Limited in particular have represented the company directors. of whom there are 900,000, or there are 900,000 businesses, small and micro businesses in the UK, and they employ collectively 2 million people as directors and 8 million people as employees. So we're talking about 10 million people in the workforce who have been affected by this. So those 900,000 businesses, most of them haven't been able to operate effectively or as productively or profitably as they did before the pandemic. They've had no grant support from the government at all. They've been left, completely high and dry. All they've had is the bounce back loan and the furlough support, which of course only goes to employees rather than the directors. So those small micro businesses, they are increasingly going out of business just because they can't survive. So once that happens, of course, the directors then go on to unemployment benefits, as do the employees. So these groups and these people, they're incredibly angry. They've put forward suggestions of schemes that similar to the self-employed scheme to the Chancellor and the Treasury. The Chancellor and the Treasury have said no consistently. So they've had no grant support at all. And it's very sad that these previously viable businesses are going to the wall. So the way that a number of them, most of them have survived, well, some of them have been able to remain in profit, and that's good. But for those that haven't, all they've had is the bounce back loan. So you will come to the end of this and find that bounce back loans have been used in some ways to invest in companies and in some ways to keep companies going, and then they'll get back to life. But other companies are going to get to the end of the furlough scheme and close down. Because they're simply no longer viable because the government haven't helped them.
So Mike, sorry, because I find myself really, really torn in this on this particular subject, and I suppose I've got kind of two tiers of frustration. There's tier one frustration, which is, why are we all talking about the wrong thing, right? So I understand why people go crazy looking at PPE deals, right? And I understand that because we can all understand personal enrichment, and if it feels as though that personal enrichment, particularly out of a crisis on the back of taxpayers' money, is going to people who in some ways have informal connections and contacts with people in power, I understand why that drives you crazy. But the sums of money are in the tens of millions, maximum hundreds of millions, right, for those PPE contracts. This is billions. This is material in terms of the finances that are available to the country. 26 billion, using kind of, the sort of ballpark figure that Stephen and I were just talking about, is the kind of money that makes a material difference in the investment in future schools and hospitals. So I've got tier one frustration. And then I've got tier two frustration, which is, how do you actually make a judgment on whether or not this is a colossal example of government waste and inefficiency that is a scandal in plain sight, or whether or not it's desperate funding to the sort of poor small and medium-sized business owner? And what I don't know is whether or not anyone is doing the work in differentiating the distribution of money to the SME versus the Chancellor.
I don't know. I mean, I think it can be entirely true that, two things can be true at the same time. One, that the loans helped people who had no other help and that were therefore a good thing. And two, that they were incredibly badly designed and something better should have been done. Mm-hmm. I strongly suspect the latter. I mean, had I been Rishi Sunak, and of course I'm not a Chancellor of the Exchequer, if had been him a year ago, I would have given the directors the same grant support as the self-employed, because often they're people doing very, very similar lines of work, but using a different accounting model. Mm. And that's because the people running the micro businesses are employing people, whereas the self-employed are not. That's often the only difference. But the Chancellor decided that he was going to make effectively the self-employed the good guys and give them a grant, and the small company the director the bad guys, and not give them a grant and only give them access to loans, which of course saddles that company with debt, and in the long run makes it harder for that company to survive and recover. Whereas if they had access to grant support, they probably would have come out of the crisis a lot more quickly.
And how much, can I just ask a question though, Mike, how much do you think this is just pure politics, i.e. the idea of saying we're going to give company directors, brackets, Jaguar driving people who are paying themselves, hundreds of thousands of pounds in dividends, a chunk of public money as a grant, lands very badly publicly, but we're going to give small and medium-sized businesses, brackets, open all hours, individuals who are struggling to make ends meet, lands as part of kind of enterprising Britain. How much of this is not really economics, it's communications?
I think a lot of it is the communications actually, and is the sense that company directors are rich fat cats who drive Jaguars and therefore that they don't deserve grants. It's not true. The average take home of these 900,000 directors is 35,000 a year, which isn't that much above the average wage. So they're mostly not rich people. They're mostly one or two people, often working from home, making life work because that's just either what they've chosen to do. They've chosen to take the risk and start a company, or they used to work for a bigger company and got laid off and are doing something else, or they want to innovate. So they're people, some of them are, innovators in tech. Some of them people who've been running a small business from their front room for the last 30 years. I mean, I've spoken to people who they've lost their family home because of this, because they've not been able to keep up the mortgage payments. Some people have had to downsize. Lots of people have had to close their businesses. I've spoken to people who've been self-isolating all year because of their health. And therefore not able to run their business because they literally can't leave the house, safety, and they've not been able to get any grant support. So, but I think the whole thing about company fat cat directors has a lot to do with it, and I think that's one reason why Rishi Sunak hasn't wanted to step up, and I think it's also a reason why Labour hasn't ridden to these people's aid. Because I mean, one person articulated to me as if saying that the Conservatives don't see these people as businesses; they don't want to help. Labour don't see them as workers, so they don't want to help either. Nobody wants to ride to these people's rescue.
Will, Mike, thank you. I'm going to come back and what happens next, but I just want to go back to Stephen, because the truth is, Stephen, you were onto this, I have to confess, way before me. I remember that I had two moments where I thought, hang on, there's something wrong. Firstly, in the middle of the summer of last year, I was talking to a friend and I was saying, by the way, this bounce back loan thing is a scandal. I mean, surely I could just get myself a bounce back loan. I could set myself as James Harding Inc. I'd get 50,000 for that. James Harding International, I might be able to get 50,000 for that. I said, it's amazing, isn't it? And this friend of mine goes, yeah, I did. And when he told me about it and the process, and he said he called his bank and he said, by the way, have you heard about these bounce back loans? And the person on the end of the phone, the bank said, yes, do you want one? Right. That was more or less the process. Is you just get one, there it'll be. And so I remember hearing about it and not thinking about it very much. And then when Rishi Sunak stood up and gave his latest in that very long string of quote unquote budgetary statements and said, we're going to put 1,000 people to work in HMRC and commit £100 million. I can't remember a single commitment to HMRC of that scale in terms of investigating one policy. And so I was interested, Stephen, I know that the piece you wrote was in December, but since then, the Treasury itself has stepped in and said, we're going to have to try and come after some of this money. And so I wonder what you think HMRC, i.e. what's going to happen to my friend? What happens now in terms of the pursuit of this money?
Well, because of the scale of it, the initial plan come up with between the banks, an institution which is kind of woefully small and understaffed for the scale of the scheme, the British Business Bank, and the Treasury tried to come up with a shared utility, which would be partially staffed by debt collectors like Arrow Global or other people like that, so that they could all the banks could share resources and go after all of these people to see, if they genuinely couldn't pay back, was the money used right and was it borrowed under the right circumstances? But a lot of the big banks didn't like this because they said we already have very big fraud detection and collection teams. We don't want to be paying money into this added level of bureaucracy. We're perfectly capable of looking at it ourselves. So it almost forced the government to sort of react and staff up the Treasury and look at this from their perspective. Because you'll remember, the banks aren't actually on the line for any of these loans. Their objective was to get it out as instructed by the government, look like the good guys, and it doesn't even sit on their balance sheets. They don't have to count it as assets against their capital. So from their perspective, it was kind of a win-win, a chance to rehabilitate their image after the financial crisis by being part of the solution rather than the problem this time. So I get the sense that, a very small proportion of these are actually going to be pursued if they are fraudulent or misspent, and will only be kind of the most eye-catching cases. The kind of alarm bells would go off in my head when I would speak to bankers I know, and they would tell me stories about how one person who owned a chain of 10 laundrettes had applied for 10 bounce back loans, so £500,000 just for themselves. And if the bank had followed the letter of the law, as put down by the Treasury, they technically should have granted all of those loans. But because they insisted on kind of quietly doing their own know your customer and fraud checks, they detected it. But the bank in question actually suspects that the person just went to another bank, made the same 10 applications, and may have got them all. So it's going to be a real mess to kind of unwind. And I don't even think that the 1,000 people being moved to that section of the Treasury is going to be enough to sort through 1.5 million loans.
And sorry, and just to interrupt you, Stephen, for a second, my colleague Liz is there. I was just checking what she said. She corrected me. The task force is on furlough and self-employment payments. It's actually not focused on the. Liz, are you there? Can I just double check that I'm getting this?
So again,
I'm wrong.
I don't know this is definitely true, but when we were putting together this thinking, we spoke to somebody and I forget, I'm trying to get in touch with Mark to confirm which government department it was, to say, we're interested in bounce back loans. Obviously there's this 100 million quid and the 1,000 people at HMRC. And we were specifically told, no, those 1,000 people in HMRC, they're not doing the bounce back loans because the bounce back loans were administered by the banks. We are only looking at furlough because furlough was administered by HMRC. But again, that's one person saying that. And I checked it and it was widely reported that it was for all the government schemes, that fraud alliance thing or whatever they're calling themselves. But that it was a very clear thing, which is if you want to talk about bounce back loans, don't come and talk to us.
You got to talk to the banks directly. Yeah.
It says here, I'm just looking as it says here, fraudulently claim taxpayers' money through schemes such as furlough and the self-employment income support scheme. So that itself is, but your read on this, Stephen, is that, thanks Liz, your read on this is that in any event, there will be some form of parliamentary select committee, public investigation.
Oh, doubtless. Yeah. Because it's just such a vast scale. And to a certain extent, a lot of the banks, the big ones like HSBC, Barclays, Lloyds, who administered this, have, they've constantly been of the view it was not our decision to lend. If you're sat there as a bank risk manager and you're looking at a 50% chance of fraud, non-payment, default, misuse of funds, that isn't a lending decision that you can conscientiously make in the sort of post-financial crisis regulatory system. And I remember one banker telling me he was sat in these meetings and he actually spoke, virtual meetings, actually spoke up and said, I just want you to know that I'm minuting all of this for the inevitable public inquiry afterwards, that you have told us to not do the proper checks and get the money out as quickly as possible. I just want you to know that because I can see me being asked to testify, go up in front of Parliament and explain this, and I want to have it written down and properly minuted and go into the company's filings.
And Stephen, does that mean, so if we spool forward and we're in the select committee or the inquiry, does that mean that in effect it's going to be impossible to tell? I don't know whether while you were speaking, Stephen, you would have seen that Liz posted an example of her brother's pub landlord. What is it? Was that it, Liz? Okay, your brother's pub. Is that?
Yes, I won't say the name of the pub, but I do say, I wouldn't lend this man a tenner under normal circumstances, but he called up and got a loan for 40 grand and then got on a plane out and lived in Ibiza for a number of weeks with his bounce back loan. Absolutely no intention to pay it back. Now his pub was shut, they've got no outside space, they don't do food, it's just a tiny little Yorkshire boozer. So I don't know if that's fraud or if that's just, I don't know.
Good living. But Stephen, I guess my point is, even when you get to the inquiry, so let's say that they put you, Stephen Morris, they said, okay, you're going to run this public inquiry, and are you going to be pushing on rope in terms of dealing with the banks when you say, how do you distinguish between the people that Mike described, 35,000 a year, single directors, trying to make ends meet and support their employees, and Liz's brother's pub landlord who's in Ibiza? Is there any way the banks are going to be able to help you distinguish the one from the other?
Well, some of them did their best, with the kind of the criteria that they were given for lending by the government. But my sense is they're going to try and wash their hands of this. They're going to say it wasn't our decision to lend. We had very strict instructions to get the money out at all costs as quickly as possible. And we kind of remember this was a year ago now, but the atmosphere really was feral at the time. People didn't know what was going to happen. And, understandably, the Chancellor was desperate, to try and support SMEs. It's more palatable to call these things 10-year low interest rate loans, that have gone through a proper banking channel than it is to say, we're going to give 50 grand to everyone with a registered business who can fill out a one-page form. So, and I think there's already been kind of the initial forays of this. You had Sarah Mumby, the permanent secretary to the Department of the BEIS, Business, Energy and Industrial Strategy. She's already told the Public Accounts Committee, we are not able to sit here today and tell you how many of these loans will be paid back. From managing a public money perspective, that is a concern, with characteristic civil service understatement. But they did this from the very start. And I guess the sense a lot of people are probably counting on the fact that by this time this all shakes out, they won't be in government or they won't be in their roles anymore, or that perhaps by extending these maximum 50,000 loans over 10 years, that's £5,000 repayment a year, let's say, and at a 2.5% interest rate. I mean, that should be manageable for businesses that are continuing to function. So it's going to be kind of a brutal mess, but ultimately I think the banking system probably has enough evidence from what they were told to wiggle out of any blame themselves.
Okay, Stephen, I'm going to come back and to Mike too in a moment, just on the sort of macro and microeconomics of this. But Tess, my colleague Tess, got a digital hand up. Hello, Tess. Morning.
Hi.
Morning.
I went all Danish there. Hi. I just wanted a couple of things. One, I think that point about let's remember how feral, as you said, Stephen, last year. So, I mean, I don't want to be blasé about 26 billion, although it's perfectly within my spending habits to do. I do think we probably need to remember the circumstances and what the alternative might have looked like and what 26 billion pounds looks like in that context. The second point is, who did what when? Yes, all needs to be understood, but as you say, things will move on. I'm kind of more interested now in the car crash that is on the other side of the hill and how the government's planning to support what will inevitably happen post furlough ending, post loans having to be paid back, post a sort of restructuring and resizing for a post-COVID economy, and what we've learned from government support through these emergency throw money at the wall and hope some of it sticks situations we've been in the last year. So what's going to be done differently, and what will get money, sort of where will it go to the biggest source of pain most quickly in terms of SMEs or regions? What have we learned from this year, and what can we apply to what we know is going to be coming? And so that's what I'm sort of looking at over the hill. And what is the role of banks in that? We know, that in this instance, they were just simply a sort of, flushing mechanism, get the money out there. How do you use them more effectively in future schemes? And how do we support the economy as we hit 2.5 million unemployed? There's going to be regional deprivation, yada, yada, yada.
So yours is about the effectiveness of the banking system as a means of distributing money fairly in the next stimulus phase. Okay.
Yeah. So if we know that, if we want to avoid Freud, you've got Freud. Oh, that was literally a Freudian slip. If we want to avoid fraud, then we need to harness the KYC, AML, all the sanction, all the anti-money laundering and systems that banks have in place. That's what they're there for. That's what they're designed to do from a compliance point of view. But do we trust banks to deliver this? And do we trust them to be able to direct it in a responsible way and in a targeted way, which might, in a minute, if you get really lucky, James, lead me onto my negative interest rate.
We're going to come to low interest rates.
We hold that as a special treat later.
But Tess, actually, I'm going to tell you what I'd like to do is just ask Kerry Thomas if Kerry's there, because we held, I don't know whether some people remember, we held, or Kerry edited a thinking on PPE, in which your beef was that we were missing bigger ticket abuse of public funds. And I know what you've thought about bounce back loans.
And I think, funnily enough, at the time of that, so yes, I was, like as you mentioned earlier on, I was really interested in the fact that people were incredibly hot under the collar about 10 million quid going to some intermediary in Spain or whatever the big story was at the time. But here were billions that we didn't really have our eye on. I think at the time, actually, I was more interested in C-bills and CL bills than I was in bounce back loans. But it may turn out, I think the sums involved, and certainly the repayment rates are even lower in bounce back loans than those bigger loans. I wonder, I mean, it's really interesting listening to the contributions this morning. There mustn't there, I think, some kind of psychological reaction to how easy it is to get money and how you calculate then the risk of not paying it back, or how hard the lender is going to come after you for repayment of that thing. So I guess that just the ease of accessing up to 50k through bounce back loans will have conditioned the people who got it to think this is not really a serious loan. And I don't suppose that was really part of the calculation. But I guess the other thing that I'm thinking is I think there's a fair criticism of the Treasury across the piece, which is that a lot of people have given due credit this morning to the conditions that existed at the time. So there was tremendous criticism of the slowness of the process, and people were looking to Switzerland and other places to say, why can't we do what they're doing? So we give credit for that, but I think there's a pattern you can see across a number of the things the Treasury have done, which is you can give them 8 out of 10 for quick response and about 2 out of 10 for refining the schemes after they've been put in place. And I think you can look at that with the furlough scheme right the way through to CL bills. There are moments when changes could have been made. I'd be interested to hear from Stephen and Mike whether they think that actually this scheme could have been re-engineered after launch, or was it just such a fire hose of money that actually, there wasn't that moment you could have looked back at it. But I certainly would put that into my public inquiry if I was going to hold one.
Stephen, what do you think of that?
I do think it was intended to be, as you said, a fire hose of money that went out as quickly as possible. And I think once they changed it to this kind of one-page self-certifying declaration, and the government had given banks the confidence that they ultimately wouldn't be on the line for any of these losses, I think they were more than happy to start talking about fulfilling their public duty and putting out this money everywhere. I mean, the issue down the line becomes that if a business didn't take this, and down the line as a society we decide essentially to write these off, not pursue them, it's quite unfair that some of these businesses have been given, these free money grants. Some of them may have misused it and gone to, Ibiza. We even got reports of people buying Porsches, people buying cryptocurrency, which ironically probably turned out to be quite a good investment in light of what's happened this year. And then they'll just pay it back at the end, or they won't. I mean, the lead to our read on December 20th was somebody applying to buy a Porsche from a car dealership under the name of the car dealer themselves, and all they had to do is search Google for that, and the bank gave them the money. So I mean, this is the lack of checking that will be done. And I guess thinking about it, potentially that is where maybe this will come back on the Treasury and the banking system, is in that they couldn't possibly have imagined that nobody would in their right mind in sort of normal times would design a 50 billion lending scheme in 5 days, whilst they had 100 other things on their plate as well. But like the C-bill scheme was slightly different because it was only 80% guaranteed. So therefore banks do have to shoulder some of the losses, and therefore would have acted more cautiously. And also that would have affected the credit relationship of those larger companies with the banking system. It would be on their permanent record and would increase their funding costs, or maybe even to prevent them from borrowing in the future. So there must have, at the larger end of the scale, there would have been a bit more of a, do we actually need this? And do we know about what the long-term implications will be for our sort of larger business? Whereas with BBLS, I think all the communications about it led people to think, I'll just take it, I'll put it in the bank, or I'll have a pump with it on something and not pay it back because it's fully guaranteed. And if I turn out to be all right, I'll just repay it over time. Or if not, I'll just declare bankruptcy, reincorporate another company and move on. And I think once the penny dropped, and the vast majority of businesses will have probably taken these, cautiously and fairly. But I think once the penny dropped with, organized crime, gangs, that essentially you could get this thing in 24 hours and no one was going to ask any questions. I think that is probably where, criticism is going to focus in coming years.
Stephen, can I just, actually, I'm going to just invite Holly S, who is, I can see, sitting on this perfect spring morning outside, because your point about, the point about the intro to that story, i.e. someone creates a false account as a car dealership, then goes to that car dealership to try and buy a £41,000 Porsche with the money that they've got from the bounce back loans, as well as being circular and a kind of case in point, also raises some questions about how the scheme itself was structured and when you could apply and under what circumstances. And Holly, I saw you mentioned this in the chat.
Yeah, I mean, it sounds like the question maybe has been answered, but I just wondered if there was any check for whether or not you need to have been a business prior to the scheme opening, or if you could simply register a business like an individual might, incorporate themselves or become a limited company and then apply for the same funding.
In the early days, I don't think there was. A major problem in the early days as well is there was no centralized system to check that you weren't applying to 7 different banks from the same company. So you could essentially get multiples of that 50,000. And we heard reports of money mules as well, like people in financial difficulties being forced by loan sharks to either borrow on behalf of their already struggling companies or incorporate new ones. I think as the weeks and months went on, this was repeatedly pointed out to the government, by people involved on the front lines, saying, you aware that there's this torrent of bad stuff that's potentially coming through that you will eventually have to answer for. And steadily more checks were kind of piled on and centralized databases were created. And it's got to the point where we are now where, things have really slowed down. But no, in the initial days, Holly, I think it was just a little bit of a free-for-all. In the sense that banks were specifically told not to do anything other than their most cursory credit checks against, the national fraud database. And then if the person, hadn't had a fraud in recent years, they were just like, just give them the money.
Stephen, thanks. And Holly, thank you. Mark, I'm just going to, Mark's my colleague here, and as you can see in the chat, knows a fair bit about this. Is your understanding that you could, though, in principle, roll out of bed in the morning, incorporate a company, call the bank in the afternoon?
So I took out a bounce back loan and I used Starling Bank for my business at the time. And I'm just looking now through the emails, and it looks, I remember at the time you had to have been incorporated as a company before a certain date. And I had to have had the bank account with Starling for a business bank account with them for a certain period of time. And they pre-authorized the amount. So they told me the limit that I could borrow through them, and different friends of mine also had their business accounts with Starling, and we all had slightly different amounts pre-authorized for us. So you did have to satisfy some criteria, and I took mine out quite early. I took mine out in the first week of May, and it looks like it took about 10 days to go through, 10 days, 2 weeks, once all the checks have been done.
It was a percentage of turnover, wasn't it? So you could borrow, I think, 25% of your turnover. So if you wanted the full 50 grand, you have to self-certify that you had £200,000. And bankers told me a suspicious number of companies had almost exactly £200,000 in turnover, or some of them did 197 just to kind of because they didn't want to trip the suspicions of having 200. But it varied. I mean, part of the problem is enforcement of this kind of varied bank by bank. A lot of the bigger lenders refuse to do anything for new customers as a way of kind of prevent fraud, because they had already done know your customer money laundering and fraud checks on people that they had an existing lending relationship with. So they managed to kind of get around the government's requirements not to do any checks that way. But I think on the racier end of the scale, that kind of thing was sidestepped, because ultimately there were going to be new customers. Some of these very small companies didn't have any pre-existing debt and therefore a relationship with the bank, and they were the ones arguably most in need of the scheme. The ones that didn't have access to financing, that were forced to close through no fault of their own.
Stephen, thanks. I just want to go back to Mike. I'm going to bring in Yelena Sofronovich in a moment if I can, because I just want to talk about the economics of this. One of the things I love about economists is, particularly when we journalists get really wound up about something, you can almost always find an economist who'll say, yes, but that doesn't matter. Right. And one of the arguments you hear around bounce back loans is, yes, it may be the case that the pub landlord's gone to Ibiza, But overall, what we needed was we had such an enormous demand side shock mandated by the government, i.e. people were required to stay at home, that we needed to pump money into the economy. And it really, in a macro sense, didn't much matter how. So if the money was going into the economy, it was going to actually help reflate things. Do you buy that argument that in macro terms, this was the right thing to do, and don't quibble about the small print?
No, not really, because I mean, what Rishi Sunak has done is saddle businesses with loads of debt, and I realise that the stories about pub landlords going to Ibiza and people buying Porsches, I mean, they're probably going to hit the headlines for the next, X number of years as banks and HMRC find out what's happened, and that those headlines, of course, those stories will get the headlines. But the vast majority of small businesses will be run by people who want to do the decent thing. If they took a loan, it was to keep their business going, and they want their business to survive because it's how they make a living, and they're not people who want to take government money and spend it on a holiday or a Porsche, and then liquidate the company and then start again. There will be a small proportion of people who live that way, but most people don't. And I think we need to be careful, and certainly I will want to be careful in not marking out micro business owners as the bad guys and people who don't take life seriously and people who aren't responsible with government money. And I mean, the government should have done this differently. There should have been more checks. As Mark said, I think you had to have a prior business relationship with a bank. And I don't know if you had to provide any documentation to show what your turnover was in the previous financial year, but you certainly had to self-certify that. So of course, HMRC or the bank could come back and look at that. But surely the bank would have had some indication about turnover simply from the amount of money that was present or not present in the bank account. And you would hope that they would have asked some questions. But I do think that we need to be careful. And the government did need to get money into the economy, but surely we should ask the question of whether a loan was the right way to do that, or whether a grant was the right way to do that. Although, as you alluded to earlier on, maybe they didn't want to, maybe they just didn't want to take the kind of comms hit of giving grants to businesses. But if they were trying to pump money into the economy, it seems like a very odd way to do it, because they've put a lot of business owners through a lot of stress. And so the business owners that I've spoken to who've got bounce back loans and are struggling to pay them back, they're not thinking, oh, well, it's fine. I can just go and buy a new sofa and then I won't pay it back and I'll liquidate and I'll start all over again. I mean, the people I've been speaking to, people who've built businesses, a lot of them over years and decades, poured their heart and soul into it. And if they see their business go to the wall, they just don't emotionally have it in them to start again. Maybe they could start again. I don't know how easy it is. But certainly that isn't how they're seeing it. So I think we do need to be careful how we talk about it and not essentially not do the bad guys' work for them.
And Mike, I really do appreciate that. And perhaps I'm in fault here for making that easy elision from fraudsters to those people who knowingly took out loans without much intention to repay, partly incentivized by the ease with which you could take the money out. Self-certification might have felt like an invitation to do exactly that. To those people who thought, I need this money as a lifeline, and now find themselves saddled with debt. And I can see that there's that spectrum. I do just want to pick up on the point that Louise Simpson and Yelena have both made about the distribution of the money. I don't know, Yelena, whether you want to weigh in and make the point that you've made in the chat. You there?
Morning, James.
Morning.
Yeah, I suppose just to kind of clarify what I'd said in the chat, I think when Stephen was talking earlier, it just very much sounds like a kind of 1920s style confidence bubble. I'm a history student. I can't help but go back to that kind of analysis. And for me personally, I suppose all of the reporting I see about how households have saved money. I know Tortoise yesterday said that households across the world have saved 5.4 trillion, but we had the ONS report a few weeks ago as well that said that households in the UK have saved something like 130 billion in excess savings. And of course, that's disproportionately skewed towards wealthier households. But given everything we've heard this morning about how easy it has been in some cases for individuals and kind of small and medium enterprises to access these loans, I just wonder whether that should temper our predictions for this post-pandemic spending boom, because it's clearly going to be built on very precarious foundations. And I wonder in our reporting how much of these savings or excess funds are really savings, and will this spending boom that, you know, people like the Bank of England or institutions, I should say, like the Bank of England are predicting, how much of that will be sustainable in terms of the actual source of that income?
Mike, do you want to answer that? And I mentioned Louise Simpson's point because one of the things that we've kept on coming to in talks in the last 6 months, I suppose, is this idea of the K-shaped recovery and whether or not the distribution of that bounce back loan money will also tell us something about, in the way in which Elaine is suggesting, you know, who essentially has the savings and who doesn't, who has the loans and who doesn't. And I don't know whether there's any real detailed data out there on where the bounce back loan money was distributed. But that's one of the things I think that's interesting in this.
Well, I don't think it's people on bounce back loans that have got these savings at all. I mean, I think it's people who've been on POE, I would imagine, who've been taking home money, not being able to go out to theatres and restaurants and gigs or go on holiday and spend the money, and it's sitting there in the bank and they're going to go out and spend it. I think if most people I think who've taken a bounce back loan are people who have been struggling. Otherwise, why would they have taken it out? As a result, they will, I mean, the people that I know, if you've got bounce back loans, they want to pay it back. They don't want to be in debt. They want to pay it back. They're not people, they haven't had it, a lot of them have had no other income over the year at all. A lot of them, if they've taken anything out, it's been paying themselves a small amount of PAYE simply to pay the bills. And they want to pay these loans back. So they're not sitting there on loads of savings at all. And I think if you're thinking that the people with the savings are the same as the people with the bounce back loans, I just don't think that's true. It's people who've been on the same salaries as they were before with no ability to spend it other than shopping online.
And Stephen, can I just ask you, if you take Mike's argument that actually what was happening in the late spring of last year was a very real answer to a very real set of problems, particularly for small and medium-sized businesses, and particularly for those directors, those 900,000 people who'd been excluded from furlough payments, is it the case that we can see the way in which that money was distributed? Is there a central database that says, look, here's where the bounce back loans were, here's who the bounce back loans were distributed to, and therefore we have some sense of geographically where they are, socioeconomically where they are, or is it just money sprayed all over the UK and we've no idea?
Not yet, but presumably there will be down the line when somebody attempts to collate all this data and work out where it is. But at the moment, we haven't. Certainly, I haven't seen anything that shows you the geographic distribution of it. Whether it's heavily concentrated in certain areas, and why these people have taken it. So it really is kind of a mystery. We have all these huge headline numbers, but very little detail on where this went. And for example, I'd be really interested to know, I mean, the government claims to have saved 1.1 billion in taxpayers' money in fraud by turning down hundreds of thousands of loans. I'd be really interested to see the breakdown of that. Like, where were they? Who were these people that were so obviously committing fraud that you couldn't even get a bounce back loan?
And so, very boring question: if this is not directly an HMRC problem, whose problem is it? Is this an FCA problem? Who has oversight of the banks in this?
It's a British business bank who are, they're catching a lot of flack over the kind of Lex Greensill CBIL scandal at the moment, because they really are this tiny organization with a small budget and headcount and balance sheet that was suddenly put in charge of the biggest and quickest SME lending scheme in the country's history. And they, quite frankly, didn't have the resources to oversee it all. So, I mean, they're the ones that are going to be under the spotlight.
Sorry, and what is the British Business Bank?
British Business Bank, I wasn't really that familiar with it before. It was initially set up, I think, to route money to entrepreneurs from the state and the government, and they organized events to kind of sort of G up entrepreneurial Britain, and it's eventually kind of morphed into this organization in charge a lot of these pandemic lending schemes, and I'm not placing all the blame on them. I mean, I don't think I could have done a much better job with the resources they had at hand. But certainly this will be something the Treasury Select Committee, the Public Accounts Committee, the FCA will be looking at in terms of whether everyone behaved appropriately in this, and when the inevitable inquiry comes as to how much of this money is lost.
Do we know how many people work at the British Business Bank? Do you have any idea how many it is?
I was desperately trying to remember when I was speaking. I can't, but I don't think it's any. I don't think it's more than 100. I mean, it's really quite shockingly low. We've been trying to find the time and space to do kind of a deep dive into what they are. We know that they're planning to staff up, but at this point, it feels a bit late.
I mean, the only reason I say that is, just one thing. I always think one of the difficult things is as soon as you talk about a number that's basically more than £1,000, it's impossible for most of us to understand what that is. 46 billion is, I think, just a little over the annual defence budget, right? And so the idea of a small outfit that was previously used to hosting events and encouraging entrepreneurship, distributing the defence budget is kind of extraordinary, or at least having oversight of it. Can I, in the last few minutes, I wanted to just try and round up and see what you think this tells us about the chancellorship of Rishi Sunak, because one of the strange things about chancellors is that mostly their reputations are framed by people in the lobby, by journalism that's happening in Westminster, and yet obviously their reputations in the longer term are determined by the way it plays out in the economy. And Stephen, I just wondered, when you look at this and the sort of management, Rishi Sunak's conduct through this past year, what conclusions do you draw?
Well, it's kind of extraordinary that you have this, Tory government, essentially, moving really towards this kind of idea of a country where everybody should have, sort of, the same opportunity for loans. You've got the furlough scheme, and they've quite clearly made an ideological choice about how to approach this. And I think it will move us closer to things, like, basic income and debates like that down the line. The fact that, the pandemic forced us to realize as a society that we didn't want to just, leave people behind and their businesses to fail and say, oh, well, you should have had money set aside for a rainy day. That's normal risk management. But I mean, part of me thinks, which is when I cover a lot of these companies as well that make promises on like climate, in 2050, the current people, the people that are in charge of doing all this won't be around or won't be in power by the time the reckoning actually comes. And they may be dragged back and have their kind of ritual, 2-hour humiliation in front of the Public Accounts Committee. But, I don't know necessarily if we're ever going to be able to assign blame for the failings or credit for what is due, because as Mike points out, and we should remember that, after all the headline catching allegations of fraud and people buying Porsches and Bitcoin, most of these companies will have taken the money in good faith. And if they can't pay it back, it will be because of circumstances outside of their control. So, but I think it's been a real kind of experiment in, how the state might want to finance, the economy going forwards.
Mike, what's your read on Rishi Sunak?
On Rishi Sunak, I think Rishi Sunak is very good at self-promotion and not very good at being Chancellor of the Exchequer, if I'm I mean, eats out to help out, for one thing, almost certainly contributed to the second wave last year, which is, probably the worst thing that he's done. He seemed to have a good week last March. I mean, the furlough scheme obviously has been fantastic and has saved, countless thousands of jobs and helped people. And I think that's been a wonderful thing. And similarly, I think the self-employed scheme has been good, although I think that's been subject to probably even fewer checks than the bounce back loan scheme. I think that's given grants to people. The difference with that, of course, is that for self-employed people, they've had those grants for up to £2,500 a month. They've been able to continue working at the same time. Whereas for company directors who have obeyed the rules, all they've been able to do for personal income actually is put themselves on furlough. But of course, directors often only pay themselves up to the tax threshold. So they've got about £500 a month if they've done that. But then the big difference with self-employed is that they weren't allowed to work at the same time. They could do essential admin, but they couldn't run the company. So their choice was put themselves on furlough, probably make very little money out of it, because they weren't allowed to put their wage up, if you see what I mean, compared to what they were paying themselves before PAYE. And you can't furlough yourself and pay yourself dividends. So they were choosing, well, I can do this, but then I cannot run the company. Whereas self-employed actually have had a much easier ride. So it's been very odd how Rishi Sunak has kind of, divide and conquered, if you like. And so it's essentially said self-employed, you're the good guys, company directors, you're the bad guys. And all that company directors have had is the loans, but they've been very limited really in how they can use that. And I know that people have used that to pay their mortgages, but what are you going to do? If you're thinking, I'm going to lose my home in the middle of a pandemic, or I'm going to slightly misuse this loan, you're going to misuse the loan. And I personally don't blame them. I blame Rishi Sunak for setting up a system which is actually, incredibly badly put together. And if it results in huge fraud, that's his fault for not putting checks in place, but also for not providing for the personal income of these people.
Mike, thank you. Sorry?
A lot of former chancellors have lined up to say, Rishi, you're new to this. It's very easy to give the money out, but the problems come when you try and get it back.
Yeah, I think I think that's right. Listen, I have to say I found this incredibly useful, this conversation, because it's served as a corrective on three fronts. One is I actually am now frustrated in different ways than I was at the start of this. One is that I do think it's a scandal in plain sight, but I do appreciate the point you just made, Mike, that this is around the Treasury rather than necessarily around the banking system. I do really appreciate the point you're making, which is actually it highlights a scandal around perception of people in business. This kind of Jaguar versus, small business owner. I wasn't aware of that stat around directors with an average take-home pay of £35,000 against, average income, I think, of just over £29,000. I wasn't clear about the fact that the HMRC intervention is probably not an answer to this. So the Treasury itself has skirted figure out a way of addressing it. And perhaps most importantly, listening to Stephen just then, I was really struck by the fact that by how entrenched our views of people on left and right are. And I suddenly think to myself, if this was a chancellor of the left, the argument would be made that he was an instinctive interventionist and therefore wasteful with public money. And it's interesting how those labels don't necessarily play across the aisle. I do want to, just in the last 2 minutes we've got, just abuse the fact that we've got Stephen here for the fact that, Stephen, you've been doing one of those pieces of reporting that I really admire, that's really hard. And even when it lands, you kind of need people to explain it, which is the inner workings of one of the great giants of finance, Credit Suisse. And it seems as though there's a crisis of culture and practice in that. At Credit Suisse. And will you just do us like a 90-second version of what this is all about? And then I'll point everyone to the reporting in the FT this morning, because it's well worth reading.
So Credit Suisse, are famous for being one of the biggest private banks in the world. And they find themselves in the headlines in the UK and all over the world because they've had two crises at once. They've been linked to the collapse, supply chain finance firm Lex Greensill, who had a 10 billion partnership with them, where he would put all these invoice financing into a bunch of funds, and then Credit Suisse would sell them to their ultra wealthy investors. Because of the intrepid reporting over multiple years by my colleagues like Cynthia Murchow and Robert Smith, this has all finally come to light that Sanjeev Gupta, one of Greensill's main partners, was just allegedly making up some of these invoices, which is all coming out in the inquiries now. So Credit Suisse has gone and done the worst thing a private bank can do, which is lose their richest, most lucrative clients, through somewhere between £3 to £4 billion. I doubt they'll pass on all those losses to their clients. So ultimately their shareholders are now on the line for this. Then they got whacked by the collapse of a family office masquerading as a hedge fund called Archegos Capital. And their counterparts, Goldman Sachs, even Deutsche Bank, who are usually at the center of all of these, managed to trade out of these collapse with relatively minor losses. Credit Suisse has lost almost 5 billion and counting. And we have attempted to do a deep dive into the culture of risk at this firm, which was kind of on its knees a few years ago and was really trying to catch up rivals. Essentially was cutting corners in its risk management, making risk managers, report to traders in the investment bank or private bankers, forcing through all these racy, risky deals, which did generate quite a lot of revenue in the short term. But when you look at it, I seriously doubt it generated more than 8 billion, which is what they've lost in literally a space of about 5 to 6 weeks. This all came to light. So there's going to be a big reckoning there. I mean, there are genuine questions about whether this bank can now, survive as a standalone entity. And the story we did today just provides as much as we could in sort of 1,500 words some really hair-raising examples of just what they did that has resulted in, you know, these you know, almost incomprehensible losses at a bank which was supposed to have turned itself around since the financial crisis, and be operating on a much more stable footing.
Stephen, thank you very much for explaining it. There are moments on it that come along where you suddenly think it's going to be busy on the banking desk. And when I read this, I thought to myself, actually, that there's something going on in a very low interest rate environment where there's just so much easy money around, where the competition between bankers is going to drive people to extremely risky and then, you know, incendiary pieces of business. So I expect you're going to have, well, a busy 2021.
Yes.
In that context, a huge thank you to you and to Mike Buckley too. It's really been fascinating and massively helpful for us in thinking about how we think about this big and generally underreported story. So much appreciated. Thanks everyone for joining us, and have a very good day.